welcome back. You're watching First Trade, and let's go and talk to another management, Rajat Kathuria, Chief Executive Officer at Signature Global. Rajat, hi, morning. Numbers seems little weak, especially from pre-sales, collection, and launches point of view. What's happening in that market?
Yeah, morning, Sajid. Thanks for inviting us to your show. So, Sajid, we'll suggest that numbers are looked at over a longer term basis. So, if you look at the last 4 years, we've seen more than 30% annual sales growth on an year-on-year basis. Yes, if you see that in isolation, only vis-a-vis the previous year, you will see a minor dip, but sales are steady. People are a little conscious and cautious at given the global turmoil which is happening, but sales are steady, and we are hopeful that during this year we'll get to see a good growth coming back.
Uh, how do you look at FY27? Um, and I want a color on the execution part as well. While you may be able to book a lot of pre-sales and do a lot of launches, what is the kind of execution and conversion of that into revenues?
Sure. So last year we completed a little less than 4 million square foot of area, which was shorter than our targeted number because of certain factors like excessive monsoon and a very elongated NGT period, and hence some of those completions have slipped over to this particular year. But this year, I think we are targeting a very good completion, which will also have a positive bearing on the collections because, with delayed execution, some of the collections also, definitely get delayed. But for this year, that's why, we've almost doubled our execution target, and, hence you'll see it in the revenue recognition factor that since we did about 26 billion last year, for the current year, we are estimating that number to go up to 50 billion INR.
Could you also, Rajat, throw some light on what the upcoming launches are for FY27?
Sure. So, Aisha, last year we did two key launches. These were in Gurgaon in the group housing, a high-rise segment. One was Cloverdale and the other was called Sarvam. Even in this year, we have, approved land with most of the approvals in place for almost three projects. These are in one of our most key or most, premium market within Gurgaon, which is on the southern peripheral road. So there are almost like three back-to-back launches which we are planning in this market, which will, which should take, the launch value to exceed 15,000 crores during this year.
But tell me, premium housing now contributes a large share of your sales bookings, right? Do you believe this premiumization trend in pockets like Gurugram is structural in nature or partly driven by the current upcycle?
So, Aisha, it's, a culmination of a lot of factors, honestly. So, over the years, a lot of good infrastructure development has happened in Gurgaon, and some of these markets, which, used to be more mid-income in nature, have premiumized due to better infrastructure, connectivity, more social factors, playing their role in the premiumization bit. And, you know, still we see very strong immigration trends from people and families moving from Delhi to Gurgaon, in search of better living lifestyles. So that's why if you'll compare it, Gurgaon versus Gurgaon, yes, it will look, the prices tend to look higher vis-a-vis the period which has gone by. But if you compare prices vis-a-vis Delhi, Gurgaon still, is a compelling market. So that's why, that immigration trend is strong. In general, office space leasing is good, and hence, Gurgaon continues to be one of the sole sort of, grade A office market for the entire NCR region. And hence, we see that demand stays steady in this region.
Sense of the kind of manpower issues which are there for the industry and for you as well. We've seen a lot of migration happening because of lack of energy available or LPG cylinders available. Are you seeing that getting normalized, or it still continues to be the same?
No, the numbers did go down over the last 1.5 months. They are improving at a pace slower than what we expected, but we expect that to get back to normal levels sometime soon. But yes, that number is lower than where we were about 2.5 months back.
How you also saw realizations improve a bit, by to nearly 15,250 per square feet in FY26. Going into FY27, do you see a significant jump happening in the realization? And is there a correlation to the premium housing sales and the market as well? Because the markets have been tepid for the last 1 year. Do you see some kind of pullback in terms of inquiries, or for that matter, sales happening?
So Sajid, we do not anticipate, very strong upward trajectory in realization from the current levels. These levels, make us fairly profitable in terms of the fresh sales which are being done. So by and large, yes, over the last 1.5 years, the market has seen a 20% growth in average realizations across, locations. And that's primarily because while a lot of, pre-sales have occurred over the last, 3 to 4 years, the actual delivery of homes is yet to, happen across the market. And I'm not just saying just for Signature. And so the actual livable stock available in the city hasn't really grown, and that's what's kind of pushing the prices up. As the actual supply hits, maybe at that time one can assume that prices may get stabilized, but we are still a couple of years away from that to happen. So hence we do not see prices going down for sure. Rather, they can in a very normative manner move upwards.
This is specifically for Gurugram?
This is only for Gurugram, just very micro market view.
I thought
I'm
as
not
much.
giving a pan-India view.
Right. Okay. I also want to talk about, your debt picture as well, because you've managed to reduce it sharply to about 200 odd crore rupees. What's the net debt picture like for the balance of the fiscal?
So see, that was a conscious call. We were holding a very prime land parcel of about 18 acres on the southern peripheral road, which was available only for creating yield assets like offices or retail spaces, and we do not have any exposure or experience in that field. Hence, we decided to partner with someone who really understands that space well, because ever since we started, we've been doing a build to sell housing model. So that's why, we saw a very complementary partnership happening with the RMZ group, which has done a lot of office leasing across key markets in the country. And we divested about 50% stake in one of our subsidiary entities in favor of RMZ. And, we collected about, 12.5 billion, about 1250 approximate, crores came just before the end of the previous year. That was one of the key reasons, besides, our operating cash flows, for the, net debt position to really go down. So it's as good as saying that net debt has come down to a zero level, because it's just 2 billion rupees. So for the year, and given the environment, we want to keep good liquidity position. We will selectively do new business development, but at all points in time, we want to keep the liquidity position very good, so that whatever are our existing commitments, stay absolutely intact. And for the year, I do not anticipate this net debt number to grow to any significant level. It should be southwards of 10 billion INR.
About partnership with a specialized player for the commercial segment, are you looking at grade A properties for commercial, and also are you looking at these properties who can house data centers as well?
This particular opportunity is for a mix of grade A office spaces, hotels, and more open format, retail spaces. So this will be a mix of these three developments. At this stage, we have no intent or plan to get into the data center business.
Okay, it was a pleasure talking to you today. Thank you very much for joining us and giving us a perspective on the earnings.
Thank you, Sajid. Thank you, Aisha.